My lender tells me that my VA refinance is free. Is it? Great question. My name's Evan Coffin, your VA loan originator, here to help explain. So, when we're doing refinances, they're very unique, especially on VA loans. I won't go full of detail, but you can watch some of our other videos on what we like to call VA ERLs, interest rate reduction or finance loans. But VA refinances can be really powerful because if you're not pulling money out of them, you can do that streamlined refinance called an interest rate reduction or finance loan, or ERL, that you don't need an appraisal, don't need income documentation. They're relatively smooth, fast, simple ones. Heck, for us, we don't even need a hard credit pull, just a soft pull to get them done. And it's really impressive. Allow veterans to lower the rates. Lately, though, with rates starting to drift down, some people are told, hey, I'm told I can get a free refinance. My goodness, is that real? The answer is possibly. Here's the thing. In lending, there's a lot of confusion in how buyers are charged, or how borrowers, in this case, because you're not buying the home, you're refinancing it, are charged. And you got to be aware of this. Got a couple of other good videos that are on what I like to call the three-way teeter-totter. And that's the three different ways that you're charged by lenders. Just a quick recap of that. You're charged from lenders by the interest rate, by lender fees, and then also by if there's any what we call finance charges, buy downs, or we like to say points or finance charges. So those are your three major ways that you're charged. The deal is when you're doing a refinance, those three things still come into full effect. And when someone says, hey, I hear it's free, well, that might just mean some of those costs are rolled into one or the other. The example I always give folks when we're talking about the purchase side of the business. So as we work with a lot of active duty military, PCS, and that's a bulk of our business. And if someone's ever like, hey, Evan, what's your interest rate? Sometimes I joke and just like, what do you want it to be? Because that's a very nuanced question when you consider there's three different ways that you're charged. Some lenders might take advantage of you and it's like, give me your lowest rate. Okay, I'll tell you your lowest rate. I didn't tell you it has a whole lot of finance charges on it, but there it is. And then later you get your paperwork and you're shocked. Well, the same thing can happen for refinances. So if someone's telling you on the purchase side, hey, I hear that I have no lender costs. That's awesome, but how are they getting paid? It's somewhere. It's probably built into a slightly higher interest rate, or you're paying some finance charges. Same thing where it's like, hey, I'm getting this super low interest rate. And you're like, God, it sounds too good to be true. And you look at the final documents, you're like, it was too good to be true. Why? Because they're paying a high finance charge, sometimes referred to as points or permanent buy down points. And that's what they could be getting charged for, which is why they get the super low rate. In refinance world, it's a little more nuanced, but the same mechanics to it. If you're ultimately told like, hey, it's a free refinance, and we'll point out to folks, hey, there's really two options here we can do for you. Your lowest rate option, and then I like to say the no cost credit option. And the point of saying no cost credit option is we're pointing out where ultimately the no cost part comes from, a credit that you're taking. What do I exactly mean by that? Well, the same way that if you're going to buy a home, you can pay money to get a lower interest rate. That's that third part of the way you're charged, the finance points or permanent buy down you might hear about. In the same way that you can pay money to get a lower rate, in refinance world, you can actually get money, get a credit for taking a higher rate. It's just the inverse. And on the purchase side, by the way, you can do that too. We got some people that's their strategy, take the highest rate, get a credit, and then just do that VA streamlined refinance later. It can, if it works, awesome, it can work out really well. But if rates go the wrong way, it can also burn you too. So it's a little bit of a gamble. But in the refinance world, which is what we're working with right now, there truly is the ability to have what I like to call the closest thing to a free lunch. It's effectively the closest thing to a free refinance. And that's where, rather than maybe take a rate that's this much lower, you only take a rate that's about that much lower, about half as low or so, whatever it might be, but you get a credit back. In the same way I just mentioned earlier, if you actually take a higher rate, you can ultimately get a credit. In refinance world, it just means take a less low rate and get a credit to cover your costs. But here's the thing, you want to pay attention, because if a lender's telling you at all, oh, it's free. Well, okay, what are we talking about? You're talking about like it's free as in you're rolling your costs into that interest rate. So effectively you're like getting a credit. Are you actually getting a credit? Is it covering the lender costs, or is it also covering the prepaid expenses and the title and everything else? That's where you want to get a loan estimate or a good mortgage quote to look that one over. Just be aware that three-way teeter-totter that I'm always talking about on the purchase side of the business also applies to refinances. And this is why, if you're ever curious, we have a really cool tool called our Refi tool that gives you notifications when you're eligible to do a VA streamlined refinance and can help give you an idea of what those rough savings can be. Now, I like to say it's the honest calculator. You might bring in a bunch of mailers if you have a VA loan saying some ridiculously low rates, and those rates all of a sudden you're like, man, that sounds too good to be true. And then you reach out about it and it's got like 2 full finance points on it and a bunch of lender charges, and before you know it, you're like, wow, well yeah, saving $100 a month for $10,000 in fees isn't worth it. It's an extreme scenario, but effectively the point. For our sake, we like to give you that idea of, hey, here's what it looks like with no ridiculous finance charges. If you were to do your refi, we want to make sure it's a legitimate deal for you and makes sense. But we also always try to give the option, if rates are low enough, hey, if you don't want to go down so low and you'd like to take a little bit higher rate and get a credit, you can actually get what, again, we like to call the no-cost credit option. And in that scenario, you truly are getting a refinance done at no cost. It can be very legitimate, and we've done a lot of those where it truly, same loan balance in the end, your rate's just down, and you're off to the races, and it's like real good savings. It can happen, and that's a little bit of how it can happen. No, that's not always the case, though. If people tell you, oh, it's free, you gotta know, like, what do you mean by it's free? Those 3 ways, and if you're ever curious, feel free to reach out. I'm more than happy to go over that with you, compare anything that you might have gotten before for refinance. But the main deal is work with someone that you can trust with it. We'd love the opportunity to do so for you. And that just hopefully helps break down a little bit of what or how can a refinance actually cost nothing to you. So my name's Evan Kaufman, again, your VA loan originator. Take care.